Hello, everyone. I hope you're ready to talk about cryptocurrency, which I know is still a very hot topic after today's breakfast roundtables, where we're talking a lot about that. But first, I actually wanted to start off with a little bit of maybe let's say cold water. Obviously, we've been since the beginning of this year in a bear market for cryptocurrencies, with Bitcoin prices and others down more than 50%. And I think one of the factors that may have contributed a little bit to that slide was a decision that Stripe made in January. Stripe now has millions of online retailers that use Stripe to process payments. But in January, you guys made the decision to stop accepting payments in Bitcoin. Can you talk a little bit about how you arrived at that decision? What was your experience?
Sure, happy to. As Jen said, we work with millions of businesses, merchants around the world, accepting payments, building really their commerce platform that's more aimed at developers and managing all of that through code. But the number one reason behind our decision was those merchants were not demanding Bitcoin. The usage of Bitcoin, we were the first company to integrate it. We're very interested in the space. We invested in Stellar when it first came out, but the usage just wasn't there. In many ways, if you think about Bitcoin, it was behaving more like a store of value than a currency. And that showed up in settlement times. It showed up in fees that were higher than wire transfers in some cases. The volatility, it doesn't know favors. But really, there wasn't the demand. I do think we're optimistic. Maybe there are some cryptocurrencies that will behave more like currencies and get acceptance around the world, and we'll be watching. But as it stands today, it didn't make sense.
Can you talk a little bit more about how you actually experienced that volatility? Because I think there was some issue too, where just in the time where you guys were actually processing transactions, there were new problems arising.
Yeah, I think in July, Bitcoin took about 60 minutes for the transaction to go through, which still isn't great. Imagine going to get a cup of coffee and then standing there for 60 minutes waiting for your transaction to go through. It's not a currency. It's been as long as 3 to 5 days. And when you get that long for a transaction to clear, you actually sometimes have, and the price difference changes, you actually have to do another transaction in order to make up the difference. So it became very complex. On our side, but also on the merchant side, in order to reconcile and manage their books and know what they were actually selling, because the Bitcoin value is so volatile. It was changing, daily at that time.
Wow. Ashish, I know you guys at Ripple have a product that you sell to all sorts of financial institutions that uses cryptocurrency called XRP. Can you talk a little bit about, I know so far no bank has actually agreed to use XRP for payments, but that's something that your CEO, Brad Garlinghouse, has guaranteed will happen by the end of this year. Can you talk a little bit about what is the resistance that you're getting from banks and financial institutions and what it's going to take to overcome that?
Yeah, I think that's a good point. And that what we're finding is that it's a regional difference as well. So in Southeast Asia, it's a very different story than the US, where a lot of these banks and financial institutions are reliant on the HSBCs, the Citibanks of the world to move money, but they're the future superpowers of the world. And they're seeing that they can use blockchain technology to leapfrog the Western world and maybe not rely so much on the service that Citibank offers to move money. The other thing is that there are a lot of issues with using digital assets and cryptocurrencies to move money. But part of what we've done at Ripple is made that experience a good one. So for example, there is an issue with volatility, but using our technology, if they want to move money into Mexico, for example, they're seeing the US dollar to Mexican peso rate, and they're only exposed to the volatility as it transfers across the different systems for a few seconds. And so if they want to send $100 equivalent into Mexico, they're guaranteed to get $100 equivalent in Mexico. And that's just really been about trying to understand the kind of customer experience we wanted to deliver, and then wrapping that up into a good product experience for our customers. And we're seeing that banks aren't the first adopters of the digital asset product, but upstart financial institutions are really adopting that product and moving a lot quicker, especially in the emerging markets.
So you've thrown out some good reasons why banks should be using this, but why aren't they? What are the reasons that they're giving you that they're just not ready to do it?
Well, I think that banks aren't going to be the first adopters of technology. They want to see it out there. But once the first one moves, it's like herd mentality. They all jump in. And so I think that Brad's right. We're going to see adoption later this year. But the first entry point is going to be the upstarts, the new companies that want to expand into a new country. And if you're going to expand into a new country today, I really think that you're going to use blockchain for that expansion. It's just more efficient. There's less friction. And it makes a lot of sense. And so that's where we're going to see the first adoption.
And one thing you mentioned was volatility, which we were obviously talking about earlier. Bridget, I want to ask you, because IBM just about 3 hours ago actually broke some news that you're using something called a stable coin now for blockchain payments. Can you explain what that is and how that works?
Yeah, sure. So we're very excited about the use of blockchain and call it the real world economy, not just the securities and the crypto. And when we think about something like Bitcoin, it really behaves much more like a security than a utility for payments. If you think about what we're seeing with blockchain is there are 3 real-world use cases that are very powerful: disruption of supply chain, disruption of payments, and the ability to vault and secure identity. And that really is a trifecta, because supply chain uses payments and identity is a lot which powers payments. So we do see a lot of promise behind payments. And why this is really important for the world is trust is at an all-time low. There's loads of middlemen involved. Payments cost a lot of money to do. Lots of people don't have access to them. So there's a real economic inclusion as well as a business efficiency and speed of money point to getting this payments conundrum right. Not to mention that it's 40% of banks' profits. So one of the issues is the stability point around hooking whatever token you use in a blockchain to a fiat currency and a real world currency. And so we are really experimenting with this concept of stable coin, which is basically a fiat-backed US dollar-pegged currency, which is backed by FDIC-insured deposits, so it really can be used as a payments mechanism. And I would say that the banks may not be using Ripple per se for clearing and settlement or Bitcoin, but are really pushing and experimenting with payments and with lending in the real economy. So for example, with Stellar and ClickX, we have FX going across low-traded volume corridors between New Zealand, Australia, Southeast Asian islands, and the UK. And that's working and up and running with a couple of the largest banks. Or in Europe, 6 banks have formed a blockchain consortium called We.Trade, which takes the finance required to fuel small and medium business export trade from 45 days to less than a day, because they share the platform. And that really is moving money. So I think the banks and other participants are going to find that blockchain is very useful to move money as they experiment. I would finally say that we're trying to build a platform and an approach that all these different types of tokens and fiat-backed currency coins can actually play on a platform, because we do believe this will evolve, that loads of different tokens and networks are actually built to fuel networks for people to participate in business.
And the banks that are using IBM for these blockchain payments, are they actually using Stellar's cryptocurrency called Lumens to make these payments? Are they actually using cryptocurrency?
In the FX corridors, yes.
Yeah.
But pegged to the currencies. It's not free float.
Do you think they'll start to use XRP soon too?
I think that they will use lots of dollar-backed tokens, and I think that you're going to see that being used by the big banks. But I also think you will see different forms of tokens. So, for instance, we're doing work. We built a blockchain for a bank called the Plastic Bank, and its existence theorem really is around how do you take plastic from being a waste, which will have a larger volume in 2050 than the fish in the ocean, to being something that's a valuable currency. And the whole business model is basically poor communities on the 3 rivers in Asia where we have the most plastic pollution can collect and weigh plastic by volume. It becomes tokenized on the blockchain and exchanged for goods and service. That's a network where that token really is a plastic token, and plastic then has value and currency. And I do see a world where different kinds of networks like that will evolve over time.
I think just one thing I agree with a lot of what you said. I think one thing I do disagree with is that it's the big banks that are going to be leveraging blockchain. I mean, blockchain at the end of the day is about decentralization. And what we're seeing is a high uptake in super regional banks. And so Asian banks that want to compete at a global level, that are growing at 20% per year, those are the guys that are hungry for blockchain technology. And then just like one thing with stablecoins, super interesting, but just a definition of what a stablecoin is number one, you're either backing the US dollar, so you're giving them US dollars and they're issuing a coin. The second way is that you're using a smart contract to either buy or sell your currency to keep it stable, which works great when in a bull run, but if it's going down, you have to buy more and more of your currency. And I mean, I studied economics in undergrad. I didn't study much, but I did learn that a lot of the peg currencies out there ended up moving back to free markets anyway. And so maybe in the short term, there's a lot of value in stablecoins, but I'm pretty bullish on digital assets that are free market movements and open market as a long-term play there.
Well, I would just give you some data, which is most of the top global banks are pretty aggressively pursuing blockchain. So I think that we're going to see experiments. But the point really is that 55% of the world's payments occur outside of the world's largest banks. So the world's largest banks are not going to control this. I think we would definitely agree on that.
Yeah, I think you said it right. I mean, I think the largest banks in the world are going to continue to do experiments. But we're seeing real adoption, real use case production from a lot of the regional players in emerging markets especially.
But to Ashish's point, I think blockchain is really about decentralization and trustlessness, and frankly, its biggest application is for people who don't want government or regulated entity involvement or visibility. If we're going to be honest with ourselves, the killer app of Bitcoin today is ransomware. Right? And so I think that FX is something you both mentioned, and it's certainly a use case, but we have yet to see really, and you can work on FX in other ways. Like we work with our merchants around the world to do like-for-like settlement. As they mature, they have banking entities in multiple markets. They can accept payments in multiple currencies and keep them within that banking relationship. I do think it's interesting to think about the stablecoin as a transition mechanism, but the reality is it's still a fiat currency, and you have to do the reconciliation and the conversion now between the stablecoin, the currency, and your transaction. There's like a lot of complexity. We're very interested to see if there's some use cases that start to emerge, and Stellar may be a network where you see some of that. But I'm worried that we're conflating some private blockchain activations, which is kind of antithetical to what the blockchain is, with do we have some new networks here that are being used in the way that money moves today? And that is not the case today.
Yeah.
So I'm just going to, I think this is a great point of view. Blockchain has two sets of use cases really and capabilities. One is in the public unpermissioned domain, which would be your Bitcoins. But the second, in terms of using for businesses, business needs to know where the money comes from and who they're doing business with. So there will be a massive, massive expansion of blockchains around business processes because the inherent nature of blockchain means that you can share a process flow. So if you think about some of the blockchains that we're seeing built and IBM is building, food trust for food safety with almost all the retailers, consumer packaged goods, and manufacturers of food in the US to get food safety. Or Trust Chain, which takes diamonds from being mined into actually being made into a diamond ring and allows you to do provenance, right? Or global trade digitization, which allows documents to be shared between multiple participants through a smart contract through the entire shipping flow and is estimated to improve shipping by 15%. So those real world use cases, in my view, right, will actually end up powering a lot of embedded payments to actually settle and work those use cases, besides the fact of just FX or trading situations, right? And that permissioning, I think, is really, if you think about it, a very important thing for loads and loads of business because they want to know who they're working with.
It's a really interesting point. We'll come back to you in just a sec. I just want to let you know in about a minute we're going to take audience questions. So get your questions ready now, please.
So just to make a counterpoint there, really what you're describing makes a ton of sense, and I absolutely see the use cases, especially when it sort of comes to rights and inventory. But really, isn't that just using the word blockchain to describe better database management? You can do digital signatures, timestamps, Merkle trees, and frankly, there is a central actor who's helping to manage, you guys, right? So is that really the blockchain, or are we just using that word to describe better business applications of databases?
I think you put it right. It's I agree with a lot of that. I feel like a permission blockchain was created by Oracle in the 70s. It's now fancy. You attach blockchain to it, and you can get funding for it. But you put it right. It's process innovation. It's business process innovation. And I think that blockchain digital assets are a revolution. It's really taking trust, counterparty, out of moving value. I think that is the killer use case for blockchain. I'm super skeptical on some of the provenance and permission aspects of it, just because Oracle is so good. I mean, you guys are so good at databases. It's hard to compete and get that step level, or as we say in product, a 10x better experience by moving things onto the blockchain in a permission nature.
Well, we could debate this for hours, but let's take a brief pause and see if there's any audience questions out there. Can you please introduce yourself?
Jeff Roberts, Fortune. Bridget, I'd like to hear a little bit more about your stable coin, because the only way I understand these things is you back each coin with a full US dollar. There's other stable coins out there with more exotic mechanisms like bonds and stuff, but as she said, they're sort of suspect. But won't this just tie up a bunch of capital for you if you have to back every one of these coins with the dollar reserve?
Yeah. So that's a great question for me. I should just be really clear. We, IBM, are not issuing a stable coin, and nor do we have any intention of doing so. What we've built is a technology platform that different coins and tokens can exist on. And we are experimenting with stablecoin, just like we're experimenting with stellar lumens and other forms of digital and cryptocurrencies, because we believe that these currencies will end up interacting and being able to clear and settle between each other. So we are seeing a world where multiple of these kinds of tokens can exist. We are not trying to be a bank or issue currencies. That is the role of banks or people that will actually underwrite them. Our role is to really create the technology that people can play with, can build apps, and actually can build all sorts of blockchain networks.
Any other questions out there?
Hi, Adam Lashinsky with Fortune. Claire, I thought you made a profound point, and I want to make sure I understand it. Are you saying that oftentimes the word blockchain is being used in a marketing sense rather than in a real sense, number one? And number two, can you just go real high level? If that's the case, when will we see this tipping point of where this revolution that some people think is coming really will come? Or is it a generation away, in your opinion?
Yes, I am saying that. I do think that we've reached that, jump the shark moment where you just say da-da-da blockchain, and the SEC has to issue a warning that you can't issue such statements because of the effect it has on the market, right? That's a sign that you jumped the shark. I do think great process improvement, great database improvements are happening. I don't think they all need the blockchain, because the blockchain really is about decentralization. And really, in many ways, it's about sort of anti-censorship movements. And so when you ask that next question, which is what are the applications that are going to thrive on that blockchain, I don't think we know yet. I don't think we've seen them. And I think that's the interesting conversation, which is it absolutely, I'm sure, will have a role in the future. I can see a future where we have some conventional financial networks and we have some new ways of moving assets, whether they be currencies or other. But if CryptoKitties is like the main thing that spikes today, you don't have the killer app. And so that's the thing that I think a lot of the investors and the people watching this are looking for, as we are as well. But it's not there yet when you think about the true blockchain and the original Bitcoin white paper. I don't know if Ashish has a point of view on this.
I have a lot of points. I'll say that. I mean, sitting here at this beautiful conference in Silicon Valley, I really feel like we're overbanked. I mean, I have 6 credit cards. My wife has 8 more. And we have Venmo, we have PayPal. There's no shortage of ways to pay. I mean, Stripe is another one. But go to Asia and go to the emerging markets, and those economies are moving so quickly to digital. In India, in the next 5 years, 1 billion new people will be banked. And that's like what's driven me to blockchain, is that now these people are connected to the rest of the economy. They've been left out of the internet and some of the great things that we've all benefited from. But I think that once they have a phone, once they're connected to the internet, and then with blockchain, once they're connected to the rest of the financial world, I think that is like a great application of blockchain. And so I think like a lot of times, and we've been through Silicon Valley pitching about blockchain, people in Asia, people in Africa, and in Latin America, and the emerging markets, they get it. It's happening there. I think that sometimes.
Do you have an example?
I absolutely have an example.
Yeah.
So the base use case for a digital asset from day one, I mean, back in 2013, was that if you have one digital asset exchange and you have another digital asset exchange, if you want to send money between any of these digital asset exchanges, you either wire US dollars, that takes weeks, or you do it instantly using a digital asset. And that's because these new institutions don't trust each other. And now you have a digital asset, and now that's instant. So now you can build on top of that, which we've done at Ripple with our XRapid product, where now I can transfer in and out of fiat into a local currency instantly. And so
Again, I think the FX use case.
Can I just interject here? Because
Yes.
I want to just go back to Adam's point. I think that one of the fascinating things when you talked about what's the difference between Oracle databases, because I don't want that to be taken off, and you asked, is it real? What is real and different in the technology is it is immutable, right? And it can be permissioned, which means any contract that can, or any payment that moves through the blockchain process cannot be changed, which leads to trust, right? And so it allows networks to occur between parties who would not normally trust each other. Payments is one great use case, but again, you can think about supply chains, you can think about food, you can think about insurance contracts. All of these, we can speed up trust. So I think that's the fundamental change to business that ends up coming from out of this. It's not just a payments point.
And we only have a little bit of time left, but speaking of that, and just the different use cases, as you said in the beginning, Stripe is open to potentially accepting other cryptocurrencies. You briefly mentioned, but you were actually a big investor in Stellar, which is the company making the cryptocurrency that IBM is using. I think Stripe put $3 million into it. You've said that's something you may decide to accept in the future. So I think there's maybe a lot to be seen coming forward. But anyway, thank you guys so much for being here and asking with us.
Thank you.